Thank you, Raleigh. Thank you very much. All right, let's get everything situated here. I just need to make sure that all of my technology is working. I'm going to take this fleece off because when I don't know why it happens, but every time I start talking, I get hot, and I don't know why. So, all right, let's get that off. I still have a T-shirt on, so that'll work. All right, so if you can hear me, just give me a yes in the screen there. That'll be perfect. And then you should see a big old black slide with some red warning. It says, warning, you are going to lose all your money, and it's going to suck. Do y'all read that? Do you see that slide right there? Yeah. All right, so I am a registered Series 3 and a Series 30, so I am required to I am required to read the disclaimer. I don't have to read it. I just have to put it up here for you, and I have to scare you a little bit and tell you like you should never trade with more money than you can afford to lose. Always trade with discretionary income. I'm going to show you a lot of technical analysis today. I'm going to show you a bunch of different technical analysis tools. Some of it's going to be hypothetical. Some of it's going to be simulated. At the very end of the presentation, stick by, because the very end, I'm going to do just live technical analysis in front of you. You're going to give me your symbols, and we're going to talk about those, and we're going to break it down. I'm going to show you some really cool stuff that you can do with it, okay? So if you understand the disclaimer, give me a yes. Say, I understand I should not trade. Just say yes that you agree to. You should not be trading with more money than you can afford to lose, because God forbid that you lose it all and then you don't have any money to pay your mortgage or your groceries or your heating bill. All right, now I usually do a little joke after the warning and say, look, your trading career will probably end up like a bad country song. Your wife's going to leave you. Your kids are going to hate you. They're going to repossess your home and your truck, and your dog's going to die, or your cat if you're a cat lover, right? All right, so we're good to go. I think I've sufficiently scared you enough. All right, so this is I've only usually do the depth of technical analysis usually once, sometimes twice a year. Once again, my name is Hubert Senters, and this is my no BS approach to trading and investing. I gotta apologize to you right off the bat here. I still have I'm on the back end of a head cold, and I don't know why I still have this little tickle cough. I've already seen a doctor for it, so if you hear something rattling around in my mouth, it's these halls that I'm sucking on, so that I won't be coughing in your ear for the next hour and 15 minutes. Okay. Okay. All right. So I've already warned you and scared you sufficiently enough. So now I have to tell you what I actually believe. I actually believe that if you get around other wealthy, successful, driven folks, some of that defaultly will rub off on you. Now, you can't be lazy. You have to do some work. You're going to have to put in some blood, sweat, and tears, but they will share with you. They will mentor you. They will tell you how they did it, and they will say, look, this is how I did it. You should try this. This looks better than that. So I've got a collage of photos up here. You can also see that I've got some trade alerts, which I'll have to go over here to TradeStation and disable in just a second. This is Paul Abdul. This is Richard Branson. The guy with the big catfish head here, that's me. And then this is Mr. Wonderful, and that's Dave Ramsey. I help all these guys in some capacity, and they help me in some capacity too. I put this slide up there really not to impress you that much. I don't really care if you're impressed with me at all. I really don't care. But if a hillbilly from Eastern Kentucky, if a redneck from Eastern Kentucky can be wealthy, you all ought to be able to do it in some shape, form, or fashion too. It's. I'm not saying it's not hard. It's hard work. It most definitely is hard work, but you should be able to go get yourself a mentor and have them mentor you and help you along with your struggle. Okay. All right. Now let's go through fundamental analysis. All right. There are definitely so the presentation title is The Death of Fundamental Analysis. All right. So obviously I'm going to talk about fundamental analysis, and I'm going to talk about technical analysis. So first, let's go through fundamental analysis. Before we do that, let's just do a real quick informal survey. How do you currently trade? Do you trade fundamental analysis? Do you do technical analysis, or do you do both? Fundamental, technical, or both? And there's not a right or wrong answer, right? A lot of us were chatting our planetary systems. There you go. Technical, both. So got a mix. So that's good. All right. I don't think there's anything wrong with that. I'm mostly a technical guy, okay? For me, fundamentals don't really go into play much, but I don't think there's actually anything wrong with trading fundamentally sound companies and using technical analysis for entries and exits. Okay, if you're trading something at the PE ratio is 9 bazillion, right? The fundamentals aren't really what's driving that market. It's more the technical analysis, right? All right. So let's go through what fundamental analysis is. Fundamental analysis is a method used to analyze stocks only. All right. And fundamental analysis involves analyzing the characteristics of a company in order to estimate its value, like earnings per share, PE ratios, and dividends. You can also do cash flow. So those are all important points of evaluating something in the fundamental analysis category. Now, more fundamentals that you can do. You can also do, what the business is, what's their business model. You then have to go into the competitive advantage. All right, do they have a competitive advantage? Are they first, second, third, fourth in their marketplace? And then you have to know, like, all right, who's managing these companies? Are they a bozo? Are they just one of these guys that are tired to come in there and turn the company around, which hardly ever works. A lot of companies try it. They'll hire the turnaround experts, and then they'll figure out that they paid the turnaround experts way too much money, and they were actually just got lucky on a trend there. And then you have to see the trends of the markets. Is their business model still viable? Do they still have a competitive advantage? Do they really have really good smart management? And is the trend in their favor, like the market trends? So those are all things that you can do fundamentally with companies. Now, there are ways to track management and what they're doing with their stock and what they're doing with their company. You can be on conference calls, quarterly conference calls. Heads up, if you've ever been on one, you're better off taking an ice pick and stabbing yourself in the base of your spinal cord. It's just really painful. They're just terrible to be on. You can also be in management discussion and analysis on annual reports. You can read through those. You have to be kind of like a CSI investigator to say, like, probable or maybe, or then you have to kind of read between the lines of what they're saying and what they actually mean, because there are certain ways that they write their annual reports. Most of them do. Some of them are decent and they're really common sense, but most of them are just, it's like reading, a 75-page document written by a lawyer. Okay. Yeah. Check it. You got to check out their peers. Ownership and insider sales. You can see how much stock they own, and you can see how much stock they're liquidating with ownership and insider sales. There's always ways to track that, and it's required in the reporting and stuff. So it's really easy to track that stuff. But they may be selling for a reason, like, hey, they want a new house, or their kids going to college, or they want another new beach house in the Hamptons. It may have nothing to do with their actual company, or their stock is either high or low. They're just like, hey, I need to liquidate because I want my next new little free toy to play with. Past performance, how has the company performed in the past? Like, there's a course I do called the 7 Horsemen, and there's actually 7 stocks that beat PE and earnings ratio like 90% of the times. So past performance is pretty good, and it's a pretty good roadmap of letting you know, like, how they're going to report. Now, they may continue to report, but the technical analysis may not support that they're going to beat earnings and stuff. And then there's corporate governance, and that thing's a nightmare to take care of. And then there's financial information and transparency. Now, I don't know about you, but who in here believes that, sorry about the coughing, who in here believes that all companies are financial and information transparent? How many people in here believe that CEOs actually lie? And God forbid CEOs and CFOs lie, right? There's a high likelihood that they may not be telling you all the truth, right? And it's just like, oh, no, we're doing fine. Tyco, WorldCom, right? Who was the other guys that did the energy thing? What was the company called that just annihilated people? And you're shocked and dismayed. Enron, right? No, it's fine. It's fine. Why can't we pay the electric bill? I don't know, but it's all fine, right? So, you never really know what the guys that are running the corporations, the CEOs and the CFOs, are doing. And there's never been a case of like Lehman Brothers or Bear Stearns, or there's never been a case where any of them has taken any money, that they haven't been owed, right? Obviously, none, right? None at all. Now, I don't know about you, but when the entire little, the little deal where a bunch of firms went bust, Did anybody offer you any money in your trading account because you had a down month or a down year? Did anybody offer you some money like Bear Stearns, Lehman Brothers? Say, no, I know. You bet wrong on that trade. You were so wrong that you could potentially hurt a lot of Americans. So what we're going to do is we're going to give you some cash. I don't know. Uncle Sam never knocked on my door and said, hey, Hubert, I know you're down on your trading account this month. Here's a little something extra. Cash free. Just pay us just a little bit once you get back up, right? Checks in the mail, right? So, I mean, those guys in and of themselves, they're not that trustworthy. I'm not saying they're all like that. There are some good CEOs and some good companies. Now, by the numbers, you have to know markets. You got to know market share, industry growth, competition, regulation. These are all things you're going to have to check if you're a fundamental analysis, unless you're just cheating and going, okay, this is the PE ratio of this company. You know, going with that, I mean, you'd go like Tesla would be a terrible investment, right? But Tesla continues to go higher and higher and higher because it's got a good story behind it and it might potentially be profitable. Does anybody know how much money Amazon made in their last quarter or their last year? Amazon actually doesn't make money, right? They made zero cash. How in the love of God is Amazon even trading higher, right? Now, full disclosure, I own some Amazon from $75. I like their story, but they make no cash. So it makes no fundamental sense that Amazon would be trading above 50, 60, 70, 80, 200, 300, 400. Makes no sense at all, right? Unless you just think eventually they're going to make some cash, right? So in the fundamental analysis world, we call it razzle, dazzle, frazzle, right? You sell the sizzle of this. You sell the sizzle, not the steak. Like, oh, look at here. Look how many users and stuff. You know, it's a futures earning thing, right? Now, so just be careful with that stuff. All right, now more by the numbers. You got to look at the balance sheet. You got to take a look at the income statement, and then you got to take a look at the statement of cash flow. And there just becomes more and more and more just BS stuff that you got to look at. And when you cut it all down, the reality of the situation is it really doesn't matter. If the PE ratio of like Amazon is whatever it is, but their stock continues to go higher, it's your job as an investor and as a trader to buy that thing low and to sell it high, okay? So that's why I'm a huge believer in technical analysis. So let's go through some technical analysis. So in technical analysis, you have to believe a few things. Number one, price is king. No matter what you think about the PE ratio, let's say the PE ratio is 10, but the thing started at 200 and is tanking and it's now trading at 5. Yeah, but it's got a really good PE ratio. Who cares? Who really cares? If the price is just dumping, like you're dropping like a stone, the PE ratio is really not going to matter. All right. And it doesn't care one bit about the value of the company or the commodity. Technicians are only interested in price movements in the markets. All right, technical analysis. Technical analysis really just studies the supply and demand in a market and is attempting to determine the market direction or the trend, and it's wanting to know, is it getting better? Is it getting worse? Or is it about the same? So technical analysis, in really simple terms, what we're trying to figure out is this thing going to go higher? Is this thing going to go lower? Or is this thing going to go sideways? So in other words, all we're trying to do is understand the market by studying the market itself as opposed to its components. All right. If you understand the benefits and the limitations of technical analysis, it can give you a new set of tools and skills that will enable you to be a better trader and a better investor. All right, so I am a trader's trader. I trade anything and everything: stocks, options, futures, forex, bonds, gold, crude, agriculture products. If there was a market in Tic Tacs or toothpicks and I thought I could make money in it, I would do it. I also trade some stuff longer term, but I hold it based upon if I'm making money on it or not. I don't invest in something that's going to lose me money. Now, nobody in their right mind is going to invest in something that's going to lose them money. So you always have a stop loss. There's 3 really great ways to build wealth in the US. There's real estate, there's businesses, and there's trading and investing. Those are the top 3 ways that I know of that I spend most of my time developing: real estate, businesses, and trading and investing. So those are the 3 places that you want to spend a lot of your time. Now, we're talking about trading and investing today, so let's talk about this. Now, technical analysis works on more stuff, and it doesn't just work on stocks. It works on stocks, options, futures, forex, bonds, commodities. It pretty much works on anything. It's the same thing like with real estate and with businesses. All right. If a trade becomes an investment, define definite time to sell. Yeah, exactly. So there are some beliefs that you're going to have to kind of embrace in order for this to work for you. Okay. So the market discounts everything. In other words, you're going to have the belief that the price action, that whatever you're trading at right now, is basically all of the information is already priced into whatever you're trading. Now, there will be times where it'll get a little freaky. It'll go a little higher. It'll go a little lower. And it's actually chewing on a new bit of information that the market has developed. But you're going to have to, number one, you're going to have the belief that the market discounts or it's already priced into the market, okay? The market is very efficient, and I would tend to agree with that. It's not perfect, but it is very, very efficient and effective of coming to a true value of something. So price moves in trends. It moves in either up cycles, down cycles, or sideways cycles. Now, history tends to repeat itself because we humans have really short memories, all right? And it's just a thing that you have to really kind of just latch onto, that, stuff usually repeats itself and repeats itself and repeats itself because the mass market psychology is a lot of people will just forget what we just went through 6 months ago, 12 months ago, 2 years ago, 4 years ago. They'll just forget. They just will. It's just human nature. But that's cool. That's what technical analysis takes in place. All right. So which one wins out in your mind? Technical analysis wins in my mind, but if there's nothing wrong with trading technical, fundamental, strong companies, technically. So in other words, there's nothing wrong with trading fundamental companies that are very strong technically. I think that's the best. That's the best of both worlds for me. I usually slant more in the technician's favor. And the reason I do that is because I can trade any market that way. So what I tend to do is just trade all of the markets. Now, every market I trade a little bit differently, and I have to do some basic analysis. So what we're going to do is we're going to go through some of the things that you need to know in order to profitably and effectively be a good chartist. Technical analysis is nothing more than the ability to look at a chart going, oh, that looks higher to me. Oh, that looks lower to me. Or, oh, dear God, that I don't know what that is, right? And just to leave it alone. That's all technical analysis is. So don't make it more complicated than it is. It's really not that complicated. You should, after you get some decent training in technical analysis, in the basics, the intermediates, and the advanced of technical analysis, you should be able to read a chart. Now, how important, in your opinion, is the ability to read a chart? In my opinion, it's the same advantage of having the ability to read a book. Like, if you can't read, you're going to be extremely, extremely at a huge disadvantage. All right. So let's talk about some of the things. So when we start looking at chart types, there's several different chart types. Okay. So let's take a look at line charts. We're going to look at bar charts. We're going to look at candlestick charts. We're going to look at point and figure. And those are the things we're going to look at. So how many people in here are familiar with line charts? We're just going to spend just a little bit of time on it, just going through the basics. And I'm going to just step you through some of the real basic technical analysis. So everybody should be, a line chart is just a line on close. Heads up, when you get really, really confused on a chart, usually if you put a line chart, it's crystal clear. So if you're like, man, I'm not really sure what that thing's doing, okay, just put it on a line chart. A line on close. Super simple. Bar charts are bar charts, and it's going to give you different pieces of information. It's going to give you the high, low, the open, and close. I would say probably in America here that the most popular would be candlestick charts, because it also gives you a little bit of the psychology. It also gives you the high, it gives you the low, it gives you the open, and then also gives you a little bit of the mindset of what's going on in that actual price action. So I prefer candlesticks, but boy, if you've never had any really good training on point and figure, how many people in here actually know how to use, do you actually know how to use point and figure charts? Point and figure charts look a little weird. They look like this. They look like a series of X's and a series of O's. And you're like, man, what is that? And then it'll go like this, and then it'll go like this right here. It is an old school chartist technique, but it has stood the test of time. It after candlesticks and Ichimoku, point and figure is a default method that I really enjoy using. It's kind of confusing because it just kind of looks weird though. But after you learn how to use it, it's a really awesome tool, and it's a great way to do a little bit longer term trading because it tells you exactly where to get in, exactly where to get out, and it's the only technical analysis tool that draws perfect 45-degree angle trend lines. Okay, so let's go through some of these types. So this is a line chart, all right, and you can see that the line is, and these are old charts, so don't worry about the old charts because at the end we're going to do nothing but live charts. So I've got about a 45, I think I got about a 35 or 45 minute presentation, and then after that I'm just going to spend the rest of the time just talking about live charts with you. So we're going to just break those things down. Okay, so this is a line chart. You can obviously see that it's in a massive uptrend. It's in a longer term uptrend. This would be a medium term downtrend. This would be a minor downtrend. This would be a short term trade. So that's easy to read, right? That's an upward moving momentum trade to the high side with a line chart. Here's the same type of chart. So this gives you a little bit more information. You can see that this opened down here and it closed up here, and this was the high and this is the close. So you can see the two difference between that line chart and that bar chart. The bar chart is going to give you a little bit more information, and it's going to be more useful where, hey, where did something open and where did it close? Where was its low and where was it high? So it's really good information. Not a lot of us use bar charts anymore. Almost all of us use this pretty little thing here, which is going to be a candlestick, and it's going to tell you like, hey, green is an up, red's a down. You're going to have bullish engulfing, bearish engulfing. You're going to have dojis, bottoming candles. You're going to have doji topping candles and stuff, and it just gives you another component or another way to interpret the data that you're looking at, okay? And it's really useful. Now, here's one that you may not know. This is called a point and figure chart, all right? And a point and figure chart basically tells you, like right here, this is a breakout to the high side. That's a long signal, okay? Now, the cool thing about point and figure charts, if I'm not going to be able to do this justice because I don't have a really steady hand. It's the only technical analysis technique that allows you to draw perfect 45-degree angles off of the trend lines. Now, I can't do it perfectly because my hand's not that steady, but it'll allow you to draw perfect 45-degree trend lines. So this looks a little odd, but there's a specific way to tell you that this is a triple top right here. That's a quadruple top, and it also shows you like, hey, this was a down move, and then boom, right here's a breakout to the high side. It's a very easy way to trade. Now, it requires a little bit larger stops, and it also requires a little bit more patience in order to stay in the trades, because what it'll do is, here's the theory of point and figure. Let's say you have something that moves 1 point, okay? And then what it's going to tell you is like, all right, if it moves 1 point up, 1 point up, and then 1 point up, then a reversal would be considered 3 points down to the downside. So, and I don't have enough time to go into all the advantages of point and figure here, but it is a really effective way to let you know, like, hey, you're on support, hey, you're on resistance, hey, the markets have changed here, and it has stood the test of time. It's just as good, if not better, than candlesticks. All right, so first job as a chartist or a technical analysis or someone that can read a chart is you first have to identify the trend. It's either going to be up, down, or sideways. You're going to trade this one, you're going to trade this one you're going to avoid like the plague because you have absolutely no advantage. Believe it or not, it's where most people mess up and lose a lot of money because they read it the wrong way. They're like, well, it's sideways, but really it's up, okay? And point and figure provides less whipsaw. Yeah, it definitely does, yeah. So when you're looking at your chart, if you can't answer this question very quickly, that if it's either in an uptrend, downtrend, or sideways, then you just leave the trade alone and you move on to a different equity or you move on to a different market. Trust me, that'll save you a lot of aggravation and a lot of losses. All right, so several different ways to find a trend that have been proven over the years, year in, year out. You could just use a trend line, like in this case, you could just say, okay, this is in a valid uptrend until it would break below that trend line. That would be considered a valid uptrend. You could also say, obviously in this example, this is an older example of Apple. You can say, okay, this is in a valid downtrend and it's going to stay in a downtrend until it breaks out, right? And then here you have a minor move higher, and then you got a channeling to the downside. So there's several different ways that you can just take a quick snapshot and go higher, lower, sideways, okay? Now, obviously, what does this look like? Is this an uptrend, a downtrend, or a sideways? Oh, dear God, I don't even know how to trade this thing. Now, there is a way to trade it, but there's a specific way to trade it. So this is going to be sideways, and one of the ways, back in the 90s, there used to be I don't even know if they're still in business anymore. Anybody remember the ads that they used to run on CNBC called channelingstocks.com? So obviously, if you've got overhead resistance here, and then you've got some overhead resistance here, you can see that, the trade that you're going to do in this example would be you're going to be a buyer down here at support, and you're going to be a seller up here at resistance, right? Nice channel, right? But if it's not really, really pretty to the eye like this, and if it's messier than this, just stay away from it. All right, trend length. So there's three major trend lengths. There's the longer term trend, there's a medium term trend, and there's the shorter term trend. You have to make sure before you enter the trade, like, okay, how committed am I to this trade? And really what I do is I always have a risk number in before I do time. I go, okay, what's my risk on this trade? Now, the difference between a good trader and a great trader is great traders tend to always think about risk first and reward second. Good traders are just average traders, like, all right, how much money can I make? Oh, ease up, man. You could lose $1 million in this trade. Yeah, but how much money can I make? About 250 grand, but you're risking $1 million. Oh, that's crazy. Why would you do that? So always think risk first and reward second. So like I said, there's long-term, medium-term, and short-term trend. So in this example of this old Dow chart, you can see that the longer-term trend is here. A medium-term trend is here. Nice little medium-term sell-off. And then the shorter term was this nice little small sell-off, and then it popped right back. Does that make sense? So small, medium, large. Think about that. Yeah, and you also have to be totally willing to, once you've made a trade, if you've decided whether you're losing $10, $100, 1,000, 10,000, 100,000, you got to be willing to just pull that trigger on that loss. Like, that was the loss that you agreed to, so now stick to that. All right, trend tools. So here are some really good trend tools that I like to use on a daily basis with my technical analysis. So trend lines are very good. They do take a little bit of knack to get used to drawing, though, because sometimes you'll cheat on them. So that's why it's really cool. If you're going to use trend lines, do them on point and figure charts. It's the best way to do it, because a lot of people will cheat on trend lines. They're like, well, here's what my stock looks like. Here, this is my trend line. They're like, well, maybe this is my trend line. And they'll cheat a little bit, and they'll just lie to themselves. So when you do trend lines, make sure that you look at point and figure. Also, moving averages, good way. A lot of people use them. Sometimes they're less useful than more useful, just because a lot of people use them. You'll hear a lot of stuff about the death cross or the sacred cross, where the 200 and the 50 cross, or everybody's got a little bit different combination. Channels, you can use channels if you can't figure out if it's going up or down. And then for me, I really like using Ichimoku cloud charts, because it gives me a real good snapshot. If I'm above or below the cloud, I kind of know which direction I'm going. So these are for the better ways to use, or the better tools to use for trend analysis that I have found over the years: trend lines, moving averages, channels, and Ichimoku cloud charts. So let's go through some of those. So in this example, I'm using, hold on, let me get a drink. I'm using Hakanashi, which is another version of Japanese candlesticks. And in this example on Hakanashi, if the candlestick below my daily chart If it's blue, it tells me, okay, don't worry about it, stay long. And then if it rotates back into the red, I go, okay, I'm getting a little sell-off here. And then as soon as I have my second blue Hakanashi bar right here, I know I can get long and be okay, okay? Because in the past, I've had a very good long-term trend, a short-term sell-off, and then a resumption of the trend. Same thing here. So the reason I use 2 blue is in case I come into this situation where I've got a longer-term trend, a shorter term cycle, and I wouldn't get long here. I would let it cycle back until I had the second blue one right there. Okay, so it's an easy way if you're just terrible or if you're just not really good at going, I don't know, is it over or not? This is a really good effective way you can use. All right, you can use Ichimoku, you can use Hakanashi. They're both really good. Trend lines. Now here's an example of some people will cheat this. All right. So if you use point and figure, let's say, I mean, you could use this line back here. Why didn't I use this line? Well, it just didn't look as good, right? And you could configure this all the way up into this line here, and it'll change the angle of attack. And then some people will even do this. They'll start drawing it here, and they'll go, well, right there's my trend line. When in fact, this was the real trend line. It just broke, and then it snapped up above it. Now this is the new overhead resistance. So trend lines are useful. It usually just takes a lot of time in order to do it. Is Hakanashi, however, is spelled in toss? Yeah, Hakanashi's in there. Or you could use, yeah, Hakanashi's in toss. Definitely is. Now, moving averages. Lots of folks have lots of different moving averages. Some of the more common ones are the 20, the 50, and the 200. I have seen some people have so many daggone lines on a chart and so many different moving averages. You're like, dear Lord, which one are you looking at? And they're like, well, I'm looking at the, I don't know. Hold on. Let me see what that is. I mean, has anybody ever seen any charts where it has had so many different moving averages that the chart kind of looks like a rainbow? And you're like, well, just pick a line, anyone. Anyone could be support and resistance. So you don't want to go overboard. You don't want to go overboard on moving averages. Some of the really common ones are 20, 50, 200. A couple other common ones are a 100 or a 40 if you want to put on extras and stuff. And then what you want to do is when you're using technical analysis with moving averages is the sell-off. The short-term sell-off would be bought. The medium-term sell-off here. And then the longer-term trend, that's support. So think short, medium, long-term. And it's just an easier way to wrap your head around what's going on in that situation. So here's another example of an uptrend. Here's a good example of a channeling stock sideways. We've already talked about this, where Amazon's this is gonna be the overhead resistance, and we're always gonna sell this until it breaks above it. This is the underlying support, and we're gonna try to buy that, okay? And you're just gonna play ping pong. You're gonna go ping pong, ping pong, ping pong. Didn't get up there. You'd have to ping it again. Ping pong, ping pong. So not too bad. 1, 2, 3, 4. 3 out of 4 trades, not too shabby if you do it that way. Yeah, rainbow is more like a guppy moving average. Yeah, and guppies are actually useful if you know how to use them. But yeah, you definitely can fall into the rainbow advantage there. Now, the next thing after you learn which way the trend is going, you're going to want to incorporate volume analysis into your charts. There are several different ways to use volume analysis. Heads up, most people teach it wrong. And the reason most people teach it wrong is because they just regurgitate the crazy crap that they hear online or on CNBC or Bloomberg. We're like, well, a rally on low volume is really not a good thing. If you do your own homework, it's a great thing, okay? Some of the better books, if you read some of Larry Williams' stuff, he's done some really good analysis on it. And after reading some of his stuff, I then started checking up a lot of my own volume analysis and found the complete opposite to be true of what the masses will tell you. And they will just, I don't know why they say it. I think they just do it just to hear themselves speak it. And they're like, well, this sell-off was on low volume, and so therefore it can't be real. Well, I mean, the prices went lower, right? Like if the prices actually went lower, even though it was on low volume, did the prices not drop? I like how when people go like, well, this is a this is a fake rally. What do you mean fake? Well, you can't touch it? You can't taste it? It's not real? Like, I don't understand when they say that, like, this rally's not real. The prices either went higher or they went lower. So and it's just because everyone else says it. Larry Williams, you can just look him up. He's one of the old school traders, really good guy, good friend, good trader, but he has some really good studies on volume analysis. So what a lot of people will tell you that is, okay, this sell-off happened on low volume. Check this out. This sell-off in gold here happened in low volume. Now look here, you see this big spike? Now that's usually a capitulation or a gold spike trade where boom, you sold so much off and it started out lower, 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 and then boom, capitulation. You pick up a little gold long here and then you ride it higher. Unfortunately, it's probably just going to go about right there and then roll back over. So if anyone tells you that, I don't know what the books are. I would have to figure out all of his books and send you guys links. If anybody tries to tell you that a rally is going up, but it's doing it on low volume, that's perfect. That means it's going to continue. If you have a sell-off on low volume, that's perfect. It's probably going to continue because there's apathy. Not a lot of people care, and it just continues to go and go and go. Now, when a lot of people really get involved, so here's an analogy. So let's say this is a pool and this is a pool. So let's say we have the same amount of volume in this pool as we have in this pool. Let's say that, all right, and each dot symbolizes a person in the pool, okay? So here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 10 people on the pool, and the price action is now starting to go up, okay? Now, let's say the price action has started to go up here, and now that we have this many people in the pool, right? How many more people can we eventually get in the pool before we have to empty this pool and say, hey, everybody get out. Everybody get out of the pool. There's not enough room. We can't put any more people into the pool. So this is the analogy. And when this happens, boom, you're at the top. All right, everybody start jumping out of the pool. And then the price action then goes lower. So when you hear if volume is low on an up move or volume is low on a down move, that's a good thing. What you want to do is hold a little bit longer, hold a little bit longer, hold a little bit longer, hold a little bit longer. Then when everybody and their brother, their aunt, their uncle, and their nephew start talking about, oh my God, the stock market is it's just so easy to make money, or this market right here is just getting annihilated. That's when you then want to be one of the first cats out of the pool and go, hey guys, have fun, and watch everybody else get hurt. Okay. So I use a thing called climactic volume. And as you can see here, this gives me a little bit different distinct advantage. Do you see where it went from a red volume bar to a green volume bar here? I call that a crazy Ivan trade. And what that lets me know is, hey, heads up, you've had so much selling that now the selling has reversed from the downside now to the upside. Anybody watch the movie Hunt for Red October with Alec Baldwin and who's the other guy's name? James Bond. What's his name? No, not Roger Moore. What's his name? Sean Connery. There you go, Sean Connery. So in the analogy, so there's a submarine right here. This is going to be a crappy drawing of a submarine. And then there's another submarine. We'll make this a block. So this is the Russian sub, and this is the United States of America sub. And what happens is every so often the Russian sub will do a turn, a 360-degree turn, to see if anybody's following them in their baffles. In other words, to see if somebody's following them close enough. And you never know if they're going to do a crazy Ivan to the right or a crazy Ivan to the left. So that's why we call it a crazy Ivan trade, right? Crazy Ivan trade, because all of a sudden we're going down and then crazy Ivan back up. And it works for both the up and the down move, okay? Both the up and the down move. Here's another little crazy Ivan here. You can see a nice little pop there. And that's some of the analysis I'll do is on crazy Ivan trades. I want to know, all right, what's a good reversal trade? And I just programmed an indicator to let me figure out when that's happening. So the gray bars in here tell me that it's normal volume. The yellow bars tell me that it's a low volume move. The purple bars tell me it's some kind of crazy move, like it's just sketchy. It's just heads up, there's something weird there. Green is usually bullish, red is usually bearish. But if you have red followed by green, it's an up move, or if you have green followed by red, it's a different type of move. So let's talk about chart patterns. So now after you get chart trends, like you've identified the trend, okay? You've identified the trend, and now you've looked at the volume. So you know whether it's going up, down, or sideways, and you know whether it's either good volume, light volume, bad volume. All right. So now you've got two pieces of the equation, right? Now you have to look at chart patterns, okay? So you're going to start out with support and resistance, and everybody uses support and resistance, and then you're going to get into other patterns that are repeatable. Now, there are tons of chart patterns. Not all of them repeat at the same rate. So a lot of us humans, like if we see something that happens 2 or 3 times in a row, we're like, oh, that's a pattern. Statistically, that's not a pattern. But uh, all of us in this room think we're so smart, like, oh, I've seen that before. No, I've seen that before. Here's how it's going to end. No, this is how it's going to end. So what you have to do is you have to go back statistically and test which ones work and which ones don't work. And you're going to spend a couple years trying to figure out which ones do and don't work. Here are some of the better ones. Support and resistance. Now, support and resistance is not a laser guided bomb. It's an area, okay? So if you've got a chart that's like this, okay, it has support in this area. It's not laser. It's not this is support right there. Don't do that. That's crazy. Just don't do that. You're going to kill yourself if you do like pinpoint accuracy on support and resistance. It's a myth. It's a sucker's game. It's an area. It's an area of concern. It's kind of like profiling. Like, well, I think this guy meets my profile right here. Boom. In this area, I want to be a buyer. In this area, I want to be a seller. Okay. So it's an area. Head and shoulders work really good. Double tops and bottoms work really good. Now, the key thing about these things is they work and then they'll reverse. So if they get broken, the new support is now the resistance. The new resistance is now support. Head and shoulders work both in up and down markets. Double tops and double bottoms. Triple tops and triple bottoms work pretty good. Triangles and wedges are really, really good at figuring out what the markets are doing. Gaps will give you just a great source of information to tell you where's the fear and where there's the greed in the market. So these are all ones that I've found over the years that are very repeatable. I mean, like clockwork. So there's, how many do I have here? I've got 1, 2, 3, 4, 5, 6. So there's 6, and that's 6 setups that work really good across a bunch of different things. This indicator works very well trading indices. Yeah, it works good on indices. It works really good. So let's go through support and resistance really quick. So in this chart of the bonds, you can see that we have a support area here and a resistance area here. Once again, I want you to understand that it's a support area. You know, this is a support area, and this is a resistance area. Notice that we're not saying that the actual resistance is the line, okay? It's an area. Yeah, I mean your climactic volume. Yes, it does. It works fine, Larry. This is an example of a head and shoulders. So you've got the left shoulder, you've got the head, and you've got the right shoulder. Right shoulder is a little bit smaller than the left shoulder. And then this line I've got drawn through the chart at 655 is the neckline. So when the neckline gets cut through here, then that's your short area right there. And then notice once you break through that, what does 655 become? It used to be a support area. Now it becomes a resistance area. Make sense? It's pretty easy after you learn how to do this stuff, okay? And your eye will just be trained like, all right, let me draw on this chart. And you get to be like the Madden guy like me, like drawing all over charts, going double top, V bottom, and you can just annotate. The key thing is, just because you can find this stuff, you physically have to be able to trade it too. And that's the part where it takes a little bit of nerve, a little bit of skill. And to be quite honest with you, it takes a little bit of cojones. You got to be able to step in there and go, no, I've done my analysis. I've done my homework. This should be going down. I'm going to short this with this amount of risk, and I'm going to see if I'm coming out right or wrong on this equation. All right, so here's another example of support and resistance. We've already covered that one. Let's talk about triple bottoms, okay? So triple bottoms, here's one bottom, here's two bottoms, and then there's three bottoms, and it's all on a support area. And you can notice that it tries to go lower, it just can't. Tries to go lower, just can't. Tries to go lower, just can't. Now, there's a rule of thumb, like it's kind of like a men's suit. It's called always, sometimes, and never. You know, support will always hold once. It'll sometimes hold 2 times. The third time, if it holds, boy, it better hold and bounce like crazy, or it's going to get annihilated to the downside. So you go always, sometimes, never. So in that vein, double tops tend to work out better than triple tops or triple bottoms. But when they do hold, they can be pretty strong. And just because a pattern reveals itself, price action tells the truth about the pattern. Exactly. So you could have a head and shoulders pattern. That's a good point. So we could have a head and shoulders pattern like in this example, and let's erase all this ink. And let's say we've got this pegged as going lower. But if this then sold off down through here and then broke back up through here, traded sideways and then went higher, does that mean that this head and shoulders did not work? No, the head and shoulders still gave you a heads up. It just means this one did not work. Okay, it gave you a heads up like, hey, this is usually a rollover situation, but in this case scenario, it did not work, and now I'm going higher. All right, here is a double top. Now look, once again, double tops that look like this are real nice and pretty, where they go like this and they look like a little M. Okay, they're just not that. They just don't happen like that in nature. In the real world, what they do is you have, hey, here's a top and here's a new top, and it usually makes a little bit higher high, and then it just sells off like crazy. Way more common than this little double top phenomenon right here. They happen. They just happen less than this, because what happens is you got a market that comes up here, tests, and then it sells off, and it goes, okay, we're going to go higher. Yes, we're going higher. And then everybody piles in here, and it goes, psych, gotcha, sucker. See ya. You might experience one of those trades. If you haven't experienced one of those trades, heads up, you're going to experience one of those trades. It's just part of trading. Like, about the time you get something figured out and you jump in there, you're like, oh no. But a lot of the pattern stuff will keep you out of that stuff. Now, let's talk about wedges or triangles. Wedges and triangles, some of the better ones are ascending and descending triangles. Also, bull flags and bear flags. This would be considered a bear flag or a descending wedge. So in other words, you've got a down move here. That's your flagpole. And then this would be your flag, right, or a descending wedge. And as it breaks through here, then it's going to go lower. When you've got price action that goes like this, or it goes up and then goes like this right here, that is a bullish flag, and then it usually breaks to the high side. If you get a price action that goes like this and like that right there, that's usually a bullish flag, and it breaks to the downside. Those are really, really good patterns. And you can see right here. Here you got a nice little bearish flagpole. Sold off like crazy, and then you got a wedge here, and then you have a wedge here. And as soon as it broke through this wedge, what did it do? Went substantially lower. Here you have another little wedge, watch, up, and then you have a wedge here and here, and it broke to the high side. Yeah, bullish and bearish, yep. All right, so then you bring all this stuff together. You bring together an uptrend and a downtrend, and then you figure out the volume, and then you figure out the chart pattern, okay? So right now in our market cycle, where would you say that we're at right now in our market cycle? Because you have to take this into effect a little bit too. We're definitely not here. We're not at the excitement stage. You know, we might be here, maybe here, or maybe here. What do you think? Where do you think we're at right now? Are we in the thrill, euphoria, anxiety, or denial stage? Where are we at right now looking at this chart? I just grabbed this off the internet. I don't think we're at desperation or panic or capitulation. Nowhere near that yet, because we just keep on. I think we're in the euphoric / anxiety stage, and I think we're in one of these three. We're either at euphoria, anxiety, or denial, because we just continue to go up, and then just out of nowhere we'll drop 200 points, but then we'll go back up 150 points. So we're definitely in one of these three stages. We're not in the fear category. Nobody's scared right now. Nobody's desperate or no panic. So right now we're in euphoria or anxiety or the denial phase, right? And it really depends on what market we're talking about. Overall, I'm talking about the indexes. Yeah, there's definitely no fear yet, right? Because everybody's like, kumbaya, everything goes higher no matter what we do. So these are the stages. Now you can see what happens after we go through those stages. If we're at either, A, B, or C stage, then we're going to get through denial and fear. I would say we're probably right in here, probably right in this stage right here, like A/B right there, because there's no really there's not a ton of anxiety yet. There's just a little bit like, there's something wrong. and nobody's really in the denial phase. So we're probably A/B. So when we eventually look at how many more stages we get to go through in order for us to sell off, bottom out, and then return higher. Okay, it's at a good level. I think it's kind of where we're at. All right, so we're going to do live charts next. Gold's more of it's the exact opposite of that. So all right, I got 22 more minutes. I'm going to be doing live charts next, but before we look at live charts, I want to share something with you. Okay, so for the remaining part of the presentation, I'm just going to get through these next 10 slides pretty quick, and then I'm going to go to live charts. Then you're going to give me your charts, and I'm going to break them down technical wise, and we're just going to look at them. We'll spend some time on each individual chart. Okay, so you have to be a good chartist. You have to be able to read, be a good chart reader. All right. Good news is it's not hard. You just have to know how to do it. You need some time, and you just need to know some good old-fashioned tricks of the trades. You need a shortcut to say, all right, which patterns actually work, which ones don't, so you don't spend the next 2 years, trying to figure it out. Okay. So I'm going to show you a course that I usually teach once a year. Okay. And it's called technical analysis. And this is what is taught in the course. So in module 1s, we go through the charts, and I spent a little bit of time going through them today: bar charts, line charts, candlesticks, line charts, point and figure. Okay, so that's in module 1. And then in module 2, we go through one of the more important parts of the course, which is called charting patterns. The most important candlestick patterns that work. We talk about gap trades, normal, breakaway, continuation, exhaustions, island reversals, and a dead cat bounce. And then we talk about turning points like hedge fund buy signals and hedge fund sell signals. And then we talk about price patterns, and we go through heads and shoulders, parabolic moves, double tops and bottoms, triple tops and bottoms, V bottoms, V tops. And then there's a trade that I do called a 3 high 62 buy, 3 low 62 sell. That's a really good trade. There's base jumping trade that we do, a launch pad trade. We talk about W's and M's and triangles and wedges. So over my 22 plus years, these are the patterns that I think are the most important for you pattern wise, that repeat themselves over and over and over and over again. So I'm going to share those with you. And then in module 3, if I can get the slide to advance, please PowerPoint work. There you go. Module 3. Remember how important I told you it was to really have a foundation of point and figure charts? If you don't have point and figure on your charts, you're really missing out. And there's a lot of different free resources online that if you don't have good point and figure charts, I show you a free website that you can use. So it's clear cut signals, zero guessing. And you only use price. It has nothing to do with time. It's price only, which is cool. And I go through the best patterns for point and figure, how to use and draw the perfect trend lines, and easily define support and resistance, and you'll have your stops and targets right there on the chart. It's great for swing trades, wonderful for swing trades. GOBI charts, nope, I don't use those, unfortunately. Module 4, I teach you a basic course on Ichimoku cloud charts. The #1 technique used in Japan. You know exactly what's happening in seconds, and it's really good for trends and signals. It's designed to produce really clear signals. That is in module 4. Module 5, market profile. Also another thing is time price opportunity. It's a great way to trade price action if you're into intraday analysis, and I'll cut your learning curve in half. Okay, it's a clear-cut way to look at buy and sell areas based upon low value and high value area, and it's based upon what really drives the market, which is price discovery: low value area, high value area, and point of control. That's in module 5. In module 6, we're going to talk about Fibonacci's. I'm going to show you how and why to use Fibonacci's. We're going to use retracements and projections, and I'm going to show you how to plot them on a chart. You don't need all the Fibonacci lines. You really only need about 3 of them. The best 2 in my experience are the 50 and the 61.8% retracements, and I'm going to teach you how to use an ambush trade, which is really good for both swing trading and intraday trading. It's one of my favorite trades to do. Module 7, if you've never traded futures, I'm going to throw in module 7, futures trading 101. Okay, what are they? Why do you want to use them? The contract specs, the margins, how to pick the best one to trade. So it's a futures trading 101. If you've never traded, yeah, stockcharts.com has point and figure. They're actually pretty good too, and they do some good scans too. Really good, yeah, really good. So that's what's in module 7 is futures trading 101. If you trade stocks or options, you should also have a small futures account in order to hedge. It's really, really important that you have that. All right. And then bonus number 1, I'm going to do live analysis. I'm going to throw in 4 live sessions. So after you go through the course, and it's a pre-recorded course. When I originally did the course, I thought it was going to be 3 hours, and it ended up being roughly double that, about 5.5 to 6 hours worth of content. Okay. So it's not just a little bit of information. It's basically I'm taking 20 years of experience of my technical analysis skills and breaking it down into 6 hours of instruction. Go, look, this is the stuff that really works for me. Hopefully it'll work for you technical analysis wise so you can cut your learning curve in half. I'm going to give you 4 live sessions of technical analysis. I do it every other week. The only other way that you can get that is if you're a member of HSIC. We do it. We call it Technical Tuesdays, and we do it every other week. And they last anywhere from a half an hour to an hour, usually 35, 45 minutes. And we go through all the markets, and then you throw me symbols, and we break it down technically. Bring a list of symbols, and then we'll look at it together, and I'll tell you what to do with it. I'll give you entries, stops, and targets, plus we'll do live Q&A. All right. And then bonus number 2 is live trading session. And once again, the only way for you to get this is through HSIC. You have to be a member to be in the live trading room, and we'll give you a week of live trading. All right. And it'll be Monday through Friday. One session will be with me, and then Tuesday, Wednesday, Thursday, and Friday session will be with Michael and Pat B. And we'll trade the markets live in real time. You will put into action everything that you've learned and discovered, and plus we'll have live Q&A. Yeah, stock charts is good, and it's free. So you have absolutely 0 risk in this transaction, 100% satisfaction guaranteed, no questions asked. If you do not love it, I do not want your money, period. I always over-deliver, period, and my goal is to give you 10 times the value of the course. So here is your special offer. You now have a new opportunity to take your trading to the next level. Will you catch the next big move in the market? Okay. Now is your time to act, and here is your special link. You go to hubertsenters.com/step, and here's what you get. Chart types, that course would be free. Chart patterns would be $97. Point and figure would be $97. Cloud charts would be $97. Market profile, $97. Fibonacci, $97. 4 live trading sessions. The only way to get it is to be a member, so I'm throwing that in for free. And then 1 live trading session, 1 week. It's a value of $779. For the first 25 people that order today, I'll let you have it for $97. Now, I don't want to sell you too much, but what I'm planning on doing in the future is I'm going to take this one right here, this one, heck, I already sell this one, and this one. These 1, 2, 3, 4, 5 courses, I'm going to individually sell them all for $97. And to be honest with you, cloud charts I already sell for $97. Okay, so it's $97 for the first 25 orders today. In the future, I'm going to be charging $97 for each individual course. And has anybody had any of these courses? First off, has anybody had technical analysis with me yet? Because I usually only do it once a year. All right. You can also call the telephone number. Michelle and Jared are here to take your calls. Area code 859-963-3445. All right. So, Dan, feedback, good, bad, indifferent. What did you guys like the course? Once again, telephone number is 859-963-3445. I took the cloud course. So yeah, let me ask you a question. Do you think the cloud course was worth $97? Probably more, right? The cloud course. Excellent. Thank you very much. Yes, thank you very much. So basically, you're getting 1, 2, 3, 4, 5 courses that I would normally sell, and I'm going to sell in the future for $97 a piece. You have the opportunity to buy all of them for $97 today. It's a pre-recorded class. I'm also going to throw in 4 live sessions, 1 every other week, and I'm also going to give you a live week in the trading room, okay? I have your cloud course. Cool, Robert, what do you think about it? Annie, I use your Ichimoku all the time. Oh, cool, thanks, Annie, appreciate it. All right, so there's the link. I am not going to sell you. The link is right there in front of you. You either see the value or you don't see the value. You can either read a good deal or you can't read a good deal, right? So now let's get out of here and let's do some live charts. Okay, I'm going to remove that. All right, now I've got a link up here that you can read if I can figure out how to put it up here just really quickly. Can everybody see this? Let me maneuver this chart here so you guys can see it. And then you can also see the charts. Does everybody see this? HubertSenters.com/step 859-963-3445. All right, so now let's do some live charts. You give me some symbols, and I'll help you break it down, okay? So Ford is definitely a short. I'm going to remove my little inky thing here. But look here. So Ford broke down ever since you had it below the cloud here. Now look, where did you have some support and resistance? Let's take a look at this. Number one, where was your trend at, right? So if we look at this, we had a nice little trend line here, right? It broke the trend line, sold off, and sold off really hard. Anytime you have a huge sell-off like that there, best thing to do is just short it and hold on for the ride. Now, you also had, look here, you had some support. After that support was broken, bam, got annihilated to the downside, right? Chart with EM, just do one per line, please. Just one per line. I'll do your first one. EMES, okay? I hear the phone ringing in the background. So this is actually, look here, this is actually on support and support. So remember, it's a zone of support. Here's support. There's a zone of support. See that? So it's on support. The cloud has supported it. And you also you do have a little bit of a trend line break here. If you're looking from here to there, if you're drawing your trend line, it did break the trend line a little bit, didn't it? It went below it. So it may have problems after it bounced off of this support area. It's got to get through this little overhead trend line as resistance. Okay? Soon, S-U-N-E. If I miss you, I apologize. There are 238 people in this room, and the thing's come a little quick. That's a great offer, but I'm working on a contrarian consistent indicator, surely cutting their profit. That's funny, John. That's funny. I definitely have higher price courses like Gold Trading Secrets and Bond Trading Bootcamp. On all these webinars, I try to give you a really good deal. All right, so soon also is on support, but it's below the cloud. So you do have a little bit of support here. Unfortunately, that support did not hold. You went below the cloud. So your next area of where soon will probably go is probably going to be in the 17 area. Gold and silver. Let's take a look at gold at GC. GC is a short. So you have broken this support area. That's been broken. The cloud is a short. You do have some decent support right here, right? See 1200? So we've got some decent support at 1200 on gold. Unfortunately, gold is not down there yet. It likes about another 9 points or so. But we're getting close to a support area that if it does not hold, gold's going to drop like a stone to 1100 and then to 1000. The Dow, do you want, Steve, do you want Dow or just kind of use the YM? Will that be fine for you? How long is access to the recordings for review? Francis, as long as either you're alive or I'm alive. Neither one of us get out alive. We're both going to die at some point, but as long as I'm around, you'll have access to it. Dow stock, DOW stock. Your link is hubertsenters.com/step. Dow stock actually looks pretty good. It's holding its trend line really good. That's showing you by Ichimoku. You've got actually a good little short-term support area right here. Here's a nice little support area right there. So Dow overall looks good as long as it stays above 52. Let me see here really quickly. Okay. Keep testing cloud. Good buying there. Yep. So let's go BIDU, BIDU. I've got 9 more minutes, so get your stock symbol in here. BIDU looks pretty good. It's a valid uptrend. It's in a longer term uptrend, but look at this right now, what it's doing. A little choppy. See this little box that it's in? See this little nightmare of a box? So what I would do is I would leave it alone in the middle of the box, let it come back down here, buy it here, and then sell it up here because you got a little bit of a channel. GoPro, GPRO, great little cameras. Me and my son use them when we go scuba diving. They just launched a GoPro 4, I think it is. Great little cameras. That would be fundamental analysis. Technical analysis, the thing looks like it's going to go to 150, right? It looks really good. I like it. It's no signs of weakness yet. Today it's down just a little bit, but it looks really good. Unfortunately, since it's kind of a new IPO, one of the technical analysis tools that you'll have to use will be a Fibonacci extension. So what you'll do is you'll go from this low to this high, to this most recent low. And you can see it's going to have a problem with 97.46. If it gets through that, it'll go to 110 and then 118. You can use a 60-minute on GoPro if you want to do that. You can also do that if you're give you a little bit more information. 60 minutes still looks really good. See how it sells off to the turning line, never really gets to the standard line, so it looks really good. You get long at 91.41, stop 86.33, and a target be 110. Silver is going to be the same analysis as basically gold, but I'll do it for you. Let's go right here to daily. Let's go at silver. So silver is breaking down like a shotgun, going to go lower, broke the cloud. It is in, see this, look right here. So this was a sideways mess. It finally broke through the mess and is now going lower. So we have to figure out, look here, you see this older support here, area right here? See this older support right there? It broke that too. So now you have to shrink it down and see, all right, where can it go to? Man, now we're going to have to use a weekly. That is so bad. We have to go all the way back to a weekly chart. All right, cool. Now, you can see that we broke this support area. So the next support area on silver is we're getting really close to it. Is going to be 17.065. I don't think it's going to hold. I think it's going to go back down here to the area of $10 to say, right in here, from $13 to $10 is where I think it's going to go to. Okay. I know, right? That's it's going to hurt. I'm using TradeStation, yes. So keep putting your symbols in there. I'm reading them from the lower to the top because the top ones just they go to the top and I can't see them. One per line, please. One per line. Tesla, TSLA. Okay. So Tesla, look at this parabolic move. This thing's crazy. That's on a weekly. I got to do a daily because that's a little bit better time frame. So on a daily, it's still a pretty good buy right here in the cloud. And you know you've got this support area right here. You've got a little support area. You're into the cloud. I would be a buyer as soon as it gave me a 60-minute or a 10-minute buy signal on Ichimoku. Let's see if we can get a 10 to work. Yeah, so you're going to have to wait until it gets back above 245 in order to play with it. Because right now it's just, it's still in a massive uptrend, but right now it acts like it wants to go a little bit lower. So 253 would have to be where I'd get long at. Oh, Facebook. And if I'm skipping you, I really don't mean to. It's just I can't see them all so quick. Facebook daily looks really good. Great little long, valid uptrend line. Let's see if we can figure out where it's going to with some Fibonacci extensions. We're going to go from low to high to higher low. So you can see here on Facebook, 79.82. Obviously, we basically hit that today. Next target's 82 and then 84. Crude oil at CL. So crude oil is a massive short. Notice how it sold off the trend line. It's had this massive trend line sell here. See this trend line right here? Bink. So bumped its head right into the overhead resistance and is now selling off like crazy. Crude's just short any way you look at it. LNG, I'm sorry. I didn't put LNG. All right, LNG is a pretty good uptrend. Valid uptrend. It's holding its trend line very well. Today, unfortunately, it looks like it's going to close below this turning line, which means it's going to come back down here and revisit this support area right here, which is going to be right here, right there in that area. I would be long if it went back above 81.60. Okay. Yahoo is a good little short. Notice how it sold off when everybody tried to buy Alibaba, okay, which I tried to warn everybody on. It sold below its turning line, its standard line, sold off, had some good support. Now this is, unfortunately, now this is resistance, okay? This is going to be some decent resistance right here in this area. It needs to crawl through 42 in order to be a decent long. GILD, I got 3 more minutes and I got to go. 3 more minutes. GILD is upwards, but it's more sideways than upwards. Remember when we talked about like, it looks like a great long-term trend, but unfortunately the shorter-term trend is just a channel. So when you're on the high side of that channel, so for me, I would leave that one alone. MD, RA, BABA is just stay away from. That's easy. Just stay away from that thing for right now. This thing, once it gets to about $60, pick it up. SWKS, SWKS. All I'm doing, guys, is the one I see at the bottom. That's what I'm looking at. SWKS. Good upward trend momentum. Looks good. You got a good little bullish flag here. Let me show you what the bullish flag looks like. So this is going to be your flag pole. You see the little flag pole? There's your flag pole. And then what you've got here is you've got a nice little trend line that's like this. And then you also have another trend line that's like this. Can everybody see the little pendant? Everybody see the little flagpole? So that's a bullish flag. Ideally, you want to go through the top of that trend line and then through, and then it'll go through 60. SPY, let's just do ES. It's easier for everybody. ES is in a massive uptrend, minor downtrend. Support on it is going to be right here at 1940. I would wait to pick it up is what I would do. At SB, let's just go at SB. A little sugar. What was that? What was that? Who were the name of that song? I remember my mom and dad would listen to that song when I was growing up. Oh, sugar, sugar. Who was the band that sung that song? I have no idea, but every time I hear sugar, it just locks that song in my head. Oh, very nice. Nice. So this is a good counter trend long up to about $17. This is where the overhead resistance is. Notice that you had a trend line break. See the trend line break? It's broken the trend line, so the next place is going to go to 17-ish right here, and then we'll short it when it gets up here. Yep. The Archies. RADA, RADA. I've got 1 minute and 25 seconds. I can't help you with this, and this is a penny stock, and I don't really trade penny stocks, unfortunately. It looks like a better short than long. If that helps you, probably goes back to $1.50. Bonds, that's easy. Bonds are easy. Bonds are long above the yellow and purple line. Bonds are going to go to 139 to 140. Okay. SPLX, SPLK. I'm sorry, I can't read. All right, I got 57 seconds. This is a good long. It's above the cloud. It's broken the trend line to the downside, so it's breaking away. It just needs to get back above 55. Yep. LVS is my last one. LVS, there you go. LVS is a good short. Trend line's lower. Moving averages are lower. Looks good, lower. It doesn't have any decent support until about 55. 55. All right. So here is your link. I believe that is your link. You get 5 courses for the price of 1. Okay. You will see me in the future offer these courses at $97 a piece on my website and in emails and videos and stuff. So it's a really good deal. You get chart types, chart patterns, point and figure, cloud charts, market profile, Fibonacci. You get 4 live analysis sessions, one every other week for the next 4 weeks, every other week, and then 1 live week in the trading room. All right, and we'll contact you on the 4 live sessions and the live week of trading. I don't want to take any other speaker's time. I really appreciate you guys coming. Thank you very much. Hopefully you picked up on the courses. Good luck. Hope it helps, and I'll see you on the next one.